and good afternoon. You tune into Market Fata Fat. I'm Ankita Saxena. With me is Shesha Advari. In the next half an hour, we'll take you through all the counters that are buzzing in trade, either on the back of news floor or on the back of technical charts. But before we get going with the show, we'll take stock of how the market is shaping up at this juncture. We do see recovery coming in across board. In fact, we have managed to recover almost 170 odd points on the Nifty from the day's lows. We're nonetheless trading with cuts of 0.8%. 23,975 is what we are holding to. Now, we have managed to scale those 23,950 levels. So there is a recovery that's come across the board. Nifty Bank is also recovered actually from the day's lows. In fact, we are trading up almost 400 points from the day's low on Nifty Bank, trading with cuts of 1% or thereabouts. Broader end of the market is also seeing recovery. Small cap is now trading down 0.7%. Remember, we were down more than 1%, on broader market as well. But mid cap also trading with cuts of 1.3%. So large-based recovery is what we are seeing. In fact, the India VIX has also cooled off. Remember, the last we spoke, India VIX was trading up 10%, so high volatility, but that has cooled off, and now that is trading with gains of 6% on the India VIX. But sectorally, it is the PSU banking pack that is taking it on the chin today with cuts of 2%. Nifty Metal is also trading down 2% right now, and that's the top sectoral loser. All the sectoral indices are trading in the red except for Nifty IT. Now remember, rupee had hit the lowest level of 95 to $1, and that augurs well for the IT companies, and therefore IT is the only a place which is seeing a bit of a green coming in the market that is weak today. So Ashisha, that's how the market is shaping up, but let's also talk about all the buzzers and individual stocks that are moving in trade.
Well, yes, this is a show where we discuss all the individual stocks. So on the technical side, we are now joined by Akshay Bhagwat, Senior Vice President Derivatives Research at JM Financial Services. Akshay, afternoon. Thank you so much for joining us today. We'll come to you in just a bit, but before that, let's talk about MOIL, because this stock is down 6.5% in today's trading session on the back of weak set of numbers that it has reported. Revenues have risen by a marginal 3% YOY, but EBITDA has largely remained flat, and EBITDA margins have contracted from about 32.4% earlier to 31.5% in the fourth quarter. Profitability has seen a decline of a massive 20% on a year-on-year basis, and that is the reason the stock is declining in trade today. Manufactured products revenue fell sharply by about 52% YOY, and that impacted overall mix, and power segment revenue largely remained flat, showing marginal decline with no meaningful growth. That's as far as the power segment is concerned. But all in all, weak set of numbers, profitability declining 20% YOY, and that is the reason the stock is down more than 6% in trade today.
All right, MOIL in focus on the back of that, but let's talk about Siemens India, and Akshay has picked out Siemens for us. Tell us on the charts, what do you see for Siemens India? What are the levels you're tracking?
Good afternoon to all. So Siemens India technically is in a very strong uptrend. What we see is a bullish flag and pole pattern, which is more of a continuation bullish pattern in Siemens Limited, projecting a target of around 4050 to 4100 from current market price of 3811. And the stop loss for this trade will be below 3650.
All right. So those are the levels to track as far as Siemens is concerned. But let's talk about Navin Fluorine. That is in focus on the back of its quarter four numbers. If you look at the numbers then, we do see the profit that is up 123% on a year-on-year basis. The revenue is also seeing an uptick of 33% at 938 crores. The margins are also seeing an uptick. That's sitting at 34% versus the 25.5% on a year-on-year basis. And EBITDA is also trading up almost 80% on a year-on-year basis. They've also recommended a final dividend of 8.6 rupees per share. And we have brokerages like Nuvama that are maintaining a buy call, and they have increased the target price also to 8,031. And MK is also maintaining an ad and hiked the target price to 7,200 rupees on Navin Fluorine. It has given up those morning gains, but nonetheless, it is holding on to gains of 0.5% right now.
Okay, so that's Navin Fluorine for you, but let's also put the spotlight on HEG, because that counter reported its numbers, and the numbers have come in way below what the street was working with. In fact, on the EBITDA level, the company has reported a loss this time around. Revenues have risen by a marginal 12%, but EBITDA loss stood at about 150 crores versus a loss of 50 crore that the company reported same time last year. On the bottom line too, company has reported a loss of a massive 120 crores in the fourth quarter, and that weighed heavy on company's financials in the fourth quarter. Now remember, other income has seen a drastic decline. Other income in the same time last year stood at about 50 crores, but this time around they've written down, which means other income has been negative to the tune of 194 crores because of their investment in one of the other companies, Graftech International Limited. So on the back of this write down that they've done, it has massively weighed heavy on their profitability, and that is the reason the stock is now down 11% as we speak.
All right, let's move on to the next one then. Jubilant Foodworks is what you have picked out for us. Akshay, tell us on Jubilant, what are the levels you're tracking? In the last 6 months, it has been in a corrective phase. So going ahead, what are you penciling in on the charts for Jubilant?
Absolutely, it's been in a down phase, but lately, if you look at the flows, it's the FMCG pack which has shown a strong comeback in recent last few days rally. And Jubilant Food has seen a recovery from its pivotal support zone of 420 on strong volumes. My sense is that you can see this recovery rally extend all the way till 530 to 540, which is a projected target from short-term trading perspective for the month of May. And any buying position on this trade should have a stop loss below 440.
All right, that's Jubilant Foodworks and analysis on the chart. But let's talk about Max Financial also, that has reported its Q4 numbers, and that's trading with gains of 4.5%. On the back of that, we do see profits that jumped to 3.4% on a year-on-year basis at 100 crores versus 81 crores. We had the NIIs also that saw an uptick of more than 25% on a year-on-year basis at 202 crores, and the impairments stood at 58 crores versus 39 crores, up 46.5% on a sequential basis. So a good set coming in as far as mass financials are concerned. And on the back of that, we do see the stock jump up 4.5%.
Okay, so that's Mass Financial Services for you. But on that note, we need to slip into a very short break, but we'll discuss many more buzzers on the other side. Don't go anywhere. Welcome back. You're still tuned into Market Fata Fat, a show where we discuss all the stocks that are buzzing in trade. And let's put the spotlight on FMCG major HUL, because that counter reported its numbers during market hours today. Revenues have come largely in line with what the street was working with, but it's a big beat when it comes to margins and profitability. Revenues have come in line with what the street was working with, but EBITDA margins, as I mentioned, have come in at 23.5% versus expectations of about 23%. But remember, underlying volume growth has come in at about 6% in this quarter, and this is the highest growth that the company has reported over the last 12 quarters. Management commentary also continues to remain very positive. Priya Nair has said that more recently, heightened geopolitical tensions have led to commodity and currency volatility, but they are navigating these headwinds through disciplined savings. The resilience of their global and local supply chain and calibrated pricing actions continue to remain in focus. In fact, as far as demand is concerned, she also said that they expect FY27 to be much better than FY26, and the medium-term outlook on margins is also very solid, where they are expecting margins to be in the range of that 22 to 23.5%. So on the back of strong management commentary, HUL continues to remain in focus.
All right, moving on from FMCG major HUL to SBI Life Insurance. Akshay, you've picked out SBI Life for us. A stock that has been in a lull for a while. For the last 6 months, it's been in a lull. Do you start seeing some moves on the stock, and what are the levels you're tracking? Akshay, could you please unmute yourself?
I'm sorry. So 1760 is a massive support for SBI Life Insurance. And on the longer term charts, that's the monthly chart, we see strong support coming in at the levels of 1760. Recently, there has been a pullback tendency from support, and I believe this recovery rally should see the stock recovering back again to 1900 plus. So one can play this recovery rally with a stop loss below 1760 in SBI Life.
All right, moving on then. Let's talk about Waaree Energies that was trading down 9% in early session today on the back of its Q4 earnings. In fact, the revenue though have beaten the street estimates. It's the PAT that it's the EBITDA that missed the estimates. PAT, however, turned to be in line. Let's take a look at the numbers. Then revenue saw an uptick of 112% on a year-on-year basis at 8,480 crores. We also saw a PAT that saw an uptick of 75% at 1,126%. The EBITDA, however, was up 71%, which missed what the street was working with. It came in at 1,575 crores. So those were the numbers for Vari Energies. Though the stock did not perform as the street was expecting, it is trading with cuts of 10% as of now. All right, let's go across and listen into what the management also had to say. Vari Energies that entered semiconductor space as well. Abhishek Parekh, who's the CFO, says that the semicon space is set to make the supply chain more resilient. Let's listen into what he had to say.
There are backward integrations planned already on the table, including cell manufacturing of 10 gigawatt going live this year. 10 gigawatt of ingot and wafer construction started recently. This additional the company that we acquired yesterday is going to really integrate the operation of power electronics, be it diodes or be it other equipments that are required for manufacturing the electronic manufacturing platform. As we do the capacity backward integration, we are trying to make our supply chain more resilient, more risk-free in terms of the supply chain issues that is going all around. Last year, we have came out with our strategy Vari 2.2. In fact, over the last couple of years, we've been trying to build an organization which is beyond solar, which is talking about the entire clean energy platform, which is trying to create one of the largest energy transition company across the world.
That's the word coming in from the management of Vari Energies. The stock is down 10.5% in trade today. Meanwhile, let's also talk about Newgen Software. The stock continues to remain in focus on the back of its Q4 results. In fact, profitability has come in at 106 crores, which is an increase of 69% on a year-on-year basis. And revenues have also seen an uptick of about 13.2%. As far as margins are concerned, they've come in at 31.5% versus 21% that the company reported same time last year. Clearly, very strong set of numbers that the company has reported. The stock is up more than 7% on the back of strong set of results that it reported.
All right, so that's Newgen Software on the back of good set coming in. Let's talk about Titan then. Akshay picked out Titan from the consumption basket. Tell us on the charts, how does it look like? On the charts, it has shown. It's shown some resilience in the last few weeks. It has been moving up. Do you see that the continued up move, and what are the levels?
Yeah, so I believe the up move should continue. The stock is in an uptrend, but lately in the last 8 to 10 trading sessions, it's been confined in a range. 45.50 and 43.50 is the broader range it's been confined in. But my belief is it's more in an accumulation mode, and you should see the stock breaking out soon of this range on the upside. So position yourself for possible targets of 4,600 to 4,650 for the coming days, and your stop loss should be below 4,300 on this buying position.
Right, let's move on now to the next counter that is in focus, and that is Syngene, that was trading up 9% on a key leadership jig that has happened. Ms. Kiran Mazumdar-Shaw has now transitioned from a non-executive chairperson to executive chairperson effective from 1st of April 2026. Now, the ex-Biocon MD and CEO, Mr. Siddharth Mittal, has been appointed as the Syngene's MD and CEO. That will be effective from 1st of July 2026. Also, Kiran Mazumdar-Shaw aims to shape the next phase with the new leadership team. That was what the press release said. On the back of this management rejig, Syngene has been given a thumbs up by the street, is now trading with gains of more than 15.5% in trade.
Well, yes, and the company has also met its FY26 guidance, so several triggers continue to remain at play. But meanwhile, let's also talk about ITC. Akshay, you have picked up this counter for us. Tell us, where do you see the stock headed in the short term?
So ITC did catch up strong momentum in yesterday's trading session. There was strong volume participation as the stock broke out of a trading range at 305, 307. Now, technically, that's a strong breakout on the short-term charts, and that possibly sets the stock up for upside targets till 325 to 330. So any buying positions in ITC from trading, maintain a stop loss below 300, 325, 330 is in the making.
All right, Akshay, that was the last talk of the day. Akshay, thank you so much for taking the time out and joining us with all your stock picks. We'll let you go on that note. But before we wrap up this edition of Market Fata Fat, we'll quickly take stock of what's doing well and what's not doing well in the market right now. Like I mentioned, we do see a recovery that's coming in the market across board. But let's talk about some of the stocks that are not performing very well. The Vedanta. Let's pull up the charts of Vedanta. That is trading down with cuts of almost 64.5% in just one day. Now, remember, that's trading, ex demerger, which is happening tomorrow. It will be listed. It'll have 5 separately listed entities going ahead, and Vedanta on the back of that demerger is trading down 65%. HEG is another stock that is down 11%. Varia Energies is also trading down 10% on the back of quarter 4 results. MV is also down 8%. We have KFintech that also posted its numbers, is trading down 7% right now. In fact, Adani Enterprises is also trading down 7%. PG Electroplast, Force Motors, all of these counters are trading with cuts of 5% and more. So that's the pocket of the market that is, trading down right now. But broad-based recovery is what we are seeing at this point. But with that, it's a wrap on this edition of Market Fata Fat. Ashish and I will take your leave. Thank you so much for tuning in.